Welcome, guys. It is Mark Coe for March 27th, here to look at the markets and show you what a nice day in the markets here today. Wanted to go over some of the levels from the newsletter. So if you guys haven't checked this out, please, I encourage you to just take a look at it because it was really something quite special today. Every morning we do our morning brief, and these are some of the levels we had today. Now, in all fairness, did not come in looking to be an enormously fade day. I like to trade with the trend as much as possible, and we'll talk about that a little bit. Some of the positives of fading the market and some of the positives staying with the trend. I myself am a big fan of the trend trade, but there are times where your risk reward is on the side of at least looking at the fade, and that's what I want to look at here, the fade trade, a couple of these markets, because we had the opportunity to do that today. So let's start with gold. Gold's analysis for the morning. We had support at 12.54. Didn't quite challenge it today, but we got a $10 sell-off, and I'll show you this from the, there was your support. Never really challenged it. I'm going to read you the morning analysis from the U.S. Open. It said resistance at 12.66, and then it went on to say, it said, prefer to wait for better levels to buy the dips toward 1245. So that'd be down at this level. We never saw the 1245s. Now here was the interesting part. Sell trades between 1262 and 66, but realize they are counter trend. So let's highlight that area. Let's watch what happened in here. 62 to 66. So there's our blocked right there, U.S. session. How did we trade? Right in the middle. We traded to 64.20, dead of the middle of that 62 to 66 range. How could that have been accomplished? Well, it was something pretty interesting, especially when you get down to a little bit shorter term. What you really see is this absorption right here. And what that really means is the market trading into that zone, meeting willing sellers, meeting sell orders. And what I like to look at it as when the market identifies a level, to play the next test up into that level. So there were a number of things at work here. You had a zone that was identified hours before we traded there, 1262 to 66, and then you trade into that zone and you have these orders absorbed all while the markets are reversing. So it was just a beautiful, about a $9 trade in gold. So for any of you gold trading fans, you got to check this out. Crude oil was another one. This was just spot on. I alerted the gang to this at about 47. I used 47.13. Let me actually get on a tiny bit tighter time frame here just so you can see this. 47.13 to 18 is what we ended up developing. So to start the U.S. session, again, we were sell side if we rallied. We just didn't have enormous rally to play. But what we did have was a bigger zone, which again I talked about in the morning, and we were using support at 4,800. Now, with that being said, the entire bigger zone was encompassed in about this 40-cent range. Just to highlight it for you, there was your bigger zone. So we were looking for that zone. All right, so we know we're looking for it. And then this is what happens. It's a lot like the gold trade, and this is something you guys can use in the short term. When you see a market trade to a level, right? So here's where it's identified, and you see it with the absorption and then the small little bounce. So all that's really going on in this section of chart, and I'll highlight it for you, all that's going on is the market is balancing here. That's all it's doing. We don't know anything about future direction. All we know is the market has come from up high, sellers have controlled it, and it's continuing to range at this point. What makes this level interesting for buy trades is the fact that you're coming into that wider zone that I just lit up, that 40 cents. To top that off, the early morning support at 47. We traded to 47.01 last week. That's why we were highlighted 47. We traded down to 08 this morning. So by all accounts, right in the zone we want to be looking at. Now, this is where it got good. Within that zone, we were able to highlight a five-tick zone. I used 13 to 18, and we traded 4 cents below that. So we traded 09s. After that, and so I highlighted that level at about 10 a.m. when we were trading 27, 26, 27. We then fell down to 09. So plenty of opportunity to get buy side into that for that rally. Where did that rally take us? And this is the best part. Resistance number 1 from the morning newsletter. To the tick. I don't do that every day. I wouldn't even necessarily say I do it a lot of days, but it's pretty special when you happen. Again, this level was on our screens for about 4 hours. We had that level highlighted. So it was a phenomenal day in crude. Buy side here at the bottom, up to the sell level. I started taking some profits earlier on, and then was able to be flat at that area. So it was quite the special day. E-minis was another one. I mean, this was just a fun market day. If you're looking across markets, I mean, we had it in gold, we had it in crude oil. Here's E-minis. What were we highlighting in E-minis? 23.17 was the zone. All right, so 23.17 was the zone. Now we pull the last test within that zone, which gives us that. So it gave us about a 3-point area to be dialed in on, right? While using 23.17 as our support level. So that's all it was the support zone right there. Look at that pullback right into the zone that was established in early Europe. And look at the reaction. 20 plus points out of the S&P on that reaction. That was unreal. Euro dollar, dollar yen. Dollar yen was a special one. Dollar yen was nice. We were able to get this one pretty early in the U.S. session. Dollar yen, what was the support level from last night? And it was highlighted last night at about 6 o'clock. It was 110.15. How's that work for you? 110.15. Look at that level in play. It looks like every other chart today, doesn't it? I mean, it just lit up these levels. So I hope you guys got some of these deals. They were pretty fun. In terms of looking at the market, I think these rallies and some of these markets did not take out major trends. They didn't reverse it. In other words, you're looking at dollar yen, you're looking at S&P. They didn't go reverse these moves. They just created this volatility. And what I was talking about in the morning brief this morning is that you should love these markets as a short-term trader, because what you're seeing is good two-way volatility. And so when we talk about fade trades, when we talk about counter trend, you want to keep your counter trend trading unless you're just ultra aggressive. I think it's a dangerous way to put your capital to work. But in markets that will show you good volatility off of counter trend levels, you have to realize that there is two-way action that will go on at points, even though it may not change the overall trend. In other words, the S&P has not changed. We're still in this kind of more medium-term downtrend. Dollar yen has still not taken out big sell-side levels, but it did give a nice bounce. Again, pretty good risk-reward levels, and that's more what I'm talking about when I'm looking at the counter trend. Can you contain your risk-reward, and can you get paid? Is there enough volatility to get paid at those levels? And that's what's going on right now in this market. I mean, some of the volatility that has returned since last week has been pretty special. So as a short-term trader, I think you have to be encouraged by markets like this and hope to see more of it continue versus a return right back to the norms and calm markets, because after all, from a trading standpoint, you want a certain amount of tradable volatility, and that's really how you want to view the market. So again, really a fun day. I enjoy a day like today. It's pretty nice to look at, and it's really nice to see the levels in action like that. And so I hope you guys had a good one for the 27th of March. It's Mark Coe, and I will talk to you all soon. Cheers.